Good Monday morning and welcome to the Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Jeff Hull, Senior Financial Advisor at Manulife Wealth, will be joining us for the hour. In 30 minutes, we'll be joined by Paul Tenorio, the author of The Messi Effect, how the global legend changed the future of American soccer. And we want to hear from you this morning on First Call. Reach out with your questions on U.S. and global mid and large cap stocks, and we'll have Jeff answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about a half hour. Our email address, you want to go that route, firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Apotex has launched its IPO. The Canadian drug maker plans to issue as many as 50 million shares at a price range of $20 to $24. The company is hoping to raise up to $1.2 billion. The IPO comes nearly a decade after the murder of the founder, Barry Sherman, and his wife, Honey, in December of 2017. No one has been charged with that crime. Berkshire Hathaway is buying home builder Taylor Morrison in a $6.8 billion deal. The acquisition marks one of the first major strategic deals under new CEO Greg Abel. Analysts say Berkshire is betting the housing cycle will turn and that there's pent-up demand. The market currently faces elevated mortgage rates and affordability pressures. A new poll from Nanos Research for the Bloomberg News says a majority of Canadians want home prices to fall further than 20% nationally. That figure jumps to 69% among 18 to 34-year-olds. Two-thirds of homeowners say the price decline was positive or somewhat positive. The poll comes as the housing market has fallen back to where it was just before the COVID-19 pandemic, but analysts say prices are still too far beyond middle-class family incomes, even with the decline. And now our top-line story. NVIDIA is taking direct aim at Intel and AMD, launching a new AI-focused chip for Windows PCs coming out this fall, partnering with Dell and Lenovo as it pushes deeper into the personal computer market. For more on this, let's bring in our guest for the hour, Jeff Hull, Senior Financial Advisor at Manulife Wealth. Jeff, thanks as always for joining us, especially on a Monday. It's a glorious weekend it was here in the city, so I'm sure a lot of people are enjoying it, hopefully across the country as well. Thank you for joining us. What do you think?
Pleasure. I think it's a great deal. I love NVIDIA. I think it's a great deal. I think Microsoft will benefit. Dell's going to benefit. Lenovo's going to benefit. It doesn't surprise me because NVIDIA is just the tip of the spear as far as innovation. So I think it's a great deal and a great opportunity all the way around for all the companies involved.
Is this a new generation of personal computers then with this? Because nobody's really talked about the fact that can the computers you have, even if it's 2 or 3 years old, can you handle the AI that's out there now?
Yeah, the AI now is a very different animal altogether. And what's really focused on this NVIDIA new chip is what are called AI agents. The ability, it's almost like your own butler, your own employee to function and do and create and the things that you need it to do. Even Jensen, the CEO of NVIDIA, was talking how he's got 42,000 biological employees, meaning humans.
So
you can
nice
have hundreds of thousands of AI agents
that
can be doing all kinds of functions 24/7 nonstop. So it's pretty remarkable. But having a laptop at that speed and capability, I think is really going to help a lot of people in a number of different areas and fields.
Now, does this leave the competition behind, or are they in there still?
The one good thing about AI and the build out of quantum and everything coming, there's so much pie for everybody to eat. It's not as if they're going to eliminate competition. There's enough for everybody to go around. NVIDIA is obviously the 800-pound gorilla that keeps winning. It's almost an announcement a day of something that they're doing. But they really are, like I said earlier, the technology tip of the spear.
And with this, I mean, this will be focused on professionals who are going to really take advantage of this. Average person that's not necessarily needing it yet.
Yeah, I'd agree with that too, because you also have what's coming much sooner than people expect is the ability of quantum computing to be slowly brought into our lives in many different ways. And a lot of that's now starting to be what we call, I call it shelf stable, but basically meaning that you don't need a cryogenic freezer room to store, a quantum computer. And even some quantum, NVIDIA picked a partner called Inflection, which was very interesting. Mm-hmm. They have some quantum that's the size of my phone. It doesn't have to be kept at magnitudes below 0. And when you get that kind of processing abilities, for instance, if you're in a submarine in the military, you don't have GPS. Like, how do you know where you are? you need quantum's great at calculating time. In space, time is different than time on Earth, as an example. Also, if you're in deep space with a satellite, there's no GPS. Like, how do you know where are you in space?
Yeah.
You're in this magnitude of blackness out in outer space. So quantum is great at calculating and defining space, time, other things along the way to locate. There's some great technologies coming in that area as well.
I mean, it does sound like quantum is the next step. AI, we're still not maxed out, though, are we, by any stretch?
Oh, no, we're at the very first inning of the very first up to bat. I'll give you a quick example. There's a couple of companies out there, and I don't own these, but Joby Aviation and Archer Aviation, they made some of those new kind of almost like Uber air taxis you're seeing now in China. Some of them are in New York that fly around. The propellers of these things, they usually have about 6. Looks like a kind of a taxi helicopter that turns into a plane once it gets high enough. But what's really interesting with these is an aeronautical engineer might take a year or 6 months to design a new propeller and how the designs could go and have to test it and wind tunnel it. That same aeronautical engineer, not with quantum, but just with simple AI, can test 2 new theories and concepts in an afternoon. So it's almost like they're pulling forward technology that was going to be here in 2030, even 2040. We're starting to see that today thanks to the capabilities and abilities of AI. Looping back to NVIDIA with this new chip, that's what's going to start to happen with these AI agents and other things that are coming. Very exciting for a realm of industries from science to physics and others.
And then quantum goes...
it's
somewhere over there.
Yeah, it's insane. The speeds are 1 million to 12 million times what today's supercomputers are. And really, when you look at what's happening, I always said when AI marries quantum together, it's a whole other human experience where disease, science, medicine, the leaps forward and radical change and innovation solutions will really be there to usher in a new era for the human race.
And I imagine AI is bringing quantum in faster, too.
Absolutely, because again, it's a great marriage of the two together. And it almost reminds me a little bit of how drug pharmaceutical companies have all global distribution and big, but sometimes biotech companies come up with a new innovation, and then they'll merge some of that stuff together because they both bring something to the party. So the companies with AI having the capabilities and speed of quantum ultimately should actually marry, and then we're going to get a whole new realm, like I said earlier, of human innovation.
And what sectors might benefit from quantum? I mean, we're starting to see who's benefiting from AI, but quantum, similar?
Well, right now, quantum does exist already for military and certain government applications, so they're already benefiting already. But in the future, it'll come right down, just like we did in years past. We benefited from the aerospace industry, whether it was, Velcro was invented, the ballpoint pen. You've got situations where even defense and military were benefiting from GPS. Today, I drove here to the studio with GPS, thanks to satellites originally done for missile guidance. So all these advancements in quantum and leaps forward innovations ultimately trickle down to the benefit of consumers and all of us together.
All right, going to take a break on that note there. But up next, we'll take a look at the markets before the bell. See how things are shaping up on the markets, and it looks like June is picking up where May left off. You can see the Nasdaq up by 0.13, the S&P 500 up by 0.19. This 11 record closes in May. Some of the numbers: 9-week winning streak. If this one's 10, I believe it's the longest winning streak in about weekly winning streak in about 40 years. Asia, similar situation. Nikkei hitting a record high, up by 0.91%. The Hang Seng is also up by 0.86%. And SoftBank is now the largest Japanese company at $305 billion market cap, passing Toyota right now. I think it's up 90% in the last year. And heading to Europe, what do we see there? A little bit of a mix. The FTSE up by 0.1. The CAC 40, it is up by a quarter point, and the DAX up by about a half. And the TSX on Friday. Another good day for it. Not quite a record high, but close. And up by 0.73%. One note, of course, going in today, CPKC, the signal workers are on strike, but the railway says things are moving still. Some of the movers and shakers from Friday. Celestica up more than 10%. Montage Gold up by 8.34. Allied Gold going the other way, down by 6.5. And MDA Space off by 8.4. It's had a good little run for the last little while. Taking a look at the metals. Gold's off by a little more than a point at 45.39. Silver's up slightly at nearly 76. And copper, 2 3/4 at 6.56. Western Canadian Select on Friday dropped on the news and around that hopefully talks are progressing, up by 1.8 to 71.43. And this morning, WTI, it's up 3.5% at 90.42, so back above 90. Okay, these geopolitical tensions, that's been fueling some things and putting defense stocks back in focus as investors look at where spending is increasing, which parts of the space could see the strongest demand. For more, we're back with Jeff Hull of Manulife Wealth. Jeff, we're talking with the war and everything that's gone on with spending. It feels like they should be moving more than they are. And are they moving? Or maybe we're just not seeing it. It's kind of hovering back here somewhere.
Yeah, I'd agree with you. I'd say the businesses themselves are booming, but the stocks just don't seem to be in the limelight. There's other things that distract the public investors into, AI and quantum, like we talked about earlier, and other areas of the market. And sometimes aerospace and defense can get very confusing for public investors. So they sometimes just stay away from it. So these companies don't get their fair shake along the way.
And are they boom and bust a little bit, like up and down, or?
They can be, but really there's fire hoses of money going into them, even here in Canada as an example. When you have Trump getting in and making NATO, forcing them to spend the 2% they committed to for decades to finally spend that money, and then raising it up to 5%, and the country's actually stepping up now. That's like unprecedented money going into these areas. But again, it just doesn't seem to catch the stocks on fire as much as they should be. But there's a whole bunch of new technologies coming out. I call it Star Wars meets Star Trek. You got energy-directed weapons that can melt drones in the sky and changes the little fins for navigation, especially the little propellered ones that have plastic ones that can just shoot. It costs like 13 cents to shoot a small invisible type laser on it.
I don't know if it's a good thing if war is getting cheaper and cheaper, though.
Very true.
People think, hey, maybe we can fight these wars now. Like, let's not just have any. Let's not have any.
Pennies on the dollar, exactly.
But that is, and that's it. One of the things that's interesting, because everybody's, oh my God, drones are the future of it. But these countries aren't dumb. They're going to find counter effects for the drones, right? And that's things like that. And that is Star Wars, though, isn't it?
Kind of. And Ukraine's been actually at the tipping point there where they've really done a lot of amazing innovations, not just to deter Russian drones and how they attack them, but even countering what Russia's doing against Ukraine and how they counter the drones. They used to even have these, look like fishing line that go kilometers. So a drone operator in Ukraine would have a fiber optic cable that could so Russians could knock it down with frequencies. Now you have to physically knock these things down. So you have all these little tricks and things that they're doing. It's rather remarkable. But the drone swarming is kind of the big thing right now, where it's instead of sending one drone in, send 50, and then how do you knock down 50 drones coming all at different angles at the same time? So that's some of the new technologies that are coming out.
Straight out of those Gerard Butler movies, right?
Yeah, absolutely.
So now, if it gets cheaper to fight a war, does that mean there's less money to be made on it?
I would say yes, actually, but that can be a good thing. As someone that's been involved with NATO for years now, I'm not a fan of war. Nobody wins at war, ultimately. You lose blood, you lose treasure. But if there's ways to deter opponents, and Trump's actually not been too bad, actually, in regards to Iran. He's kind of used hard power to start, which was kinetic energy weapons. Then went to soft power, which is economic pressure and apparent diplomacy. Sometimes along the way, you got to do both, but it's that kind of fine dance between the two. But ultimately, spending on weaponry and that is just a waste of money that could be spent on an economy or other things as well. But building up your own military to be at the ready, like NATO is doing for those 32 member countries, is important, because that's the ultimate flex or deterrent against Russia, or maybe even one day China going into Taiwan.
So what do you do then? Pure play, hybrid? How do you approach it?
It's really up to the investor themselves. If you want a pure play, there's very few true pure plays out there. You got companies like Lockheed Martin, you got Northrop Grumman. They're kind of pure plays where they're over 97% military related, only a tiny portion for consumer stuff. If you go to a company like Boeing, that everyone thinks of them as airliners, they're about 50% military as far as helicopters.
Which is astounding, man. I didn't realize it was that high.
Yeah, people aren't aware of just how strong they are in that area. So that's where you can kind of decide, is it a pure play or whatnot? Because sometimes you got to decide, too, do you want a company that does consumables? For instance, RTX, formerly known as Raytheon, makes the famous Tomahawk missile.
Consumables in military.
Exactly. So the reusable.
Things you use.
Exactly. So that's one of the big things versus if you order a submarine. Could take you 12 years to get your submarine. By the time they deliver it, it's almost obsolete already. So if I was to invest in the military area, I'd look more at consumables, things people are using all the time. So you're getting reorders every time Trump sends 50 missiles in somewhere at 3 to 4 million each, and goes the call to RTX, resupply those missiles again. So those are some of the interesting areas that investors can look at and consider for the future.
But it sounds like it really is a place where you have to do your math if you're going to get into it.
Absolutely. And also, who's got the actual contracts? Like if you look at Lockheed and Northrop, not that I'm necessarily recommending them, they've got a backlog that lasts for years and years and years. If you look at any other business, like a restaurant, you looked out the door and said, oh, we got a 12-year lineup ready to go. It'd be like incredible. So this is interesting that, again, is a bit in the shadows, and therefore it's a little off the mind of most investors. It can be a great area to invest. But sometimes the stocks don't move in lockstep with the success of the business and the industry. So that's the difficulty investors need to be aware of.
All right, we'll wrap it up on that note. There are lots more to talk about. Up next, we'll be back with Jeff to see why IPO markets is on his radar. Time now to see what's on the radar for Jeff Hall. And IPO markets are what are in focus. Of course, with Manulife Wealth. And IPO is a big one. Is SpaceX that's coming up, I guess, in the next week. At some
June 12th.
June 12th. Okay, is that the date now they're talking about? They're fun, they're exciting. You get caught up in it, but they're not always necessarily the best thing.
No, not at all. And I can understand why investors do get caught up in the hype machine, because that is what an IPO ultimately is. It's peak hype, peak FOMO, fear of missing out, peak promotion. Because just like if someone was selling a house, you'd want to like cut the grass, wash the windows, stage the house properly to get the maximum price. That's really what an IPO is. They want to get the maximum value by taking their company actually public. So that's some of the pitfalls that the public has to be watch out for. But also, most IPOs, whether it's Facebook all the way back to even Tim Hortons, et cetera, you'll notice they go up quite a bit, but then they kind of start to falter a bit and kind of settle down after the hype is all gone and people moved on to the next thing. And then people always have to watch out for that 6-month cliff, I call it, that 180 days when a lot of the founders of the company, a lot of the shareholders initially are locked in the hockey penalty box for 6 months until they can sell their stock. And then they're all running to the fire exit at the same time. So there's a lot of weird maneuvers within IPOs people just need to be aware of, and then they can make wise decisions based on that.
Are there ones where you win when you buy right at the beginning?
Well, the ones that really tend to win are the ones that own the stock before the IPO.
The IPO, for
so
sure.
SpaceX is coming out. There's just going to be a handful of stock available. It's going to be way oversubscribed for. But there's other ways to own SpaceX before the IPO. You can either buy companies like Alphabet, which is Google and YouTube. They own 7% of SpaceX. EchoStar owns about 2 to 3%, which is over half the value of their company, is a SpaceX stock. But you can also look at competitors like Rocket Lab as an example. So as an example, on Friday, we had Blue Origin, with Jeff Bezos' company. His main rocket test exploded right on the tarmac there. But sometimes people don't understand space. So Friday, a lot of space stocks went down a bit. I'm like, that's strange. It should all be going up, because one of their biggest competitors just, literally exploded. And so that creates opportunities for other ones that will now pick up the slack, which is pretty incredible. It's an exciting area.
And there's some changes coming too with the IPOs, right? With the NASDAQ and NASDAQ Tech.
Yeah, there was the fast entry rule, which is kind of unprecedented, where usually the indexes like the NASDAQ 100 or the S&P 500, once a year or so they'll adjust it. The S&P might boot out 3 kind of low performing stocks, but 3, and they adjust it from time to time. This time around, the NASDAQ 100, as little as 3 days in, maybe as late as 15, are going to possibly push in SpaceX stock as an example. And that's an incredible situation, because what will happen is, as we talked about, if most of the shares are in a penalty box and haven't come out yet, and the public's going to go nuts for this when it first comes out, and then all these huge index funds, pension funds, mutual funds will be forced to buy SpaceX. Where is the float going to come from? So supply and demand is going to be way out of whack. We could see a big spike up in something like SpaceX at the IPO.
And I guess the big question, where's the money coming from?
That's one of the tricks too. I think
we're talking 1.8 now trillion. Where's the money coming from?
You got it. So that's some of the opportunity or danger investors have to watch out for. What kind of investor will buy SpaceX? Does it tend to be age 20 to 36? They maybe own a lot of crypto. Maybe they'll roll out of crypto. Could be a big, amazing company like NVIDIA. They might want to just temporarily leave to play the SpaceX trade and go back to NVIDIA as an example. But one of the biggest areas of cannibalization I think could happen is Tesla. Elon Musk's other company, because everybody already loves Elon Musk there. They adore him. It's like, do they still bet on the car company, or do they jump to SpaceX? A little bit sexier, a little more interesting there. They may jump ship there. So that's why I think Elon Musk has said, we might merge Tesla and SpaceX together. I think he's saying that to try to discourage people from trying to make this hop, changing horses, that he owns both horses. It could cause a lot of disruption for him.
And does that provide opportunities? And for something that, we're not necessarily, NVIDIA is going to be the one where everybody pulls money out to go there, but is it something you should be looking for?
Yeah, absolutely. Because I think if someone did, let's say people pulled out of NVIDIA a little bit and made the stock go down 2, 3, 4%, just because some people are just gently transitioning over to SpaceX, suddenly you get NVIDIA at a discount for something that has nothing to do with them because SpaceX has an IPO. So sometimes these distortions or distractions provide professionals and the public opportunities to kind of take advantage of some things that are being unacknowledged or in the shadows off to the side. That's a great deal.
All right. And then other IPOs coming up, are they going to pay the price for SpaceX?
I think some of the nuances of how the SpaceX deals can be done is going to now infiltrate other IPOs. We've got OpenAI coming out probably around September. That's ChatGPT. And you got Anthropic, a great AI that'll be coming out as well. So some of these fast-tracking rules to add things to an index and some of the other rules, even Elon Musk added a little bit of a pressure valve. He's looking at if the stock goes up more than 30%, maybe 10% of those in the penalty box can kind of sell off a bit of stock to take some of the pressure off, to allow that freedom from markets and index funds to have the opportunity to pick up some stock in a less chaotic tornado that are IPOs.
Is there anything Elon Musk, can there not be a chaotic
no, it's
tornado
chaos.
around
it's 24/7 chaos.
It's fascinating watching him. But so OpenAI, Anthropic, you still think they'll do all right?
Yeah, they're great companies. I think I'm more interested actually in Anthropic than anything else. And I think SpaceX can do very well. It's part of the future.
Yeah.
But space might be something for shorter term investors that could consider to roll into space. And after all the limelight and fanfare is done at the IPO, maybe they can drift into other areas as well. But space is interesting, but people got to look at the math. Because again, there's a lot of companies out there like the NVIDIAs are doing great things every day. And some space companies are kind of just there for a bit of a rocket ride and then they're done.
Yeah. All right, we're going to take a break on that note there, Jeff. Still ahead, we're taking a peek into the business of FIFA and soccer, football, depending on how you want to look at it, with our next guest, Paul Tenorio, author of The Messi Effect. Our phone lines will open as well for our first call segment, 1-855-326-6266. Send us an email, first call at bellmedia.ca. Apotex has launched its IPO. The Canadian drug maker plans to issue as many as 50 million shares in the $20 to $24 price range. The company is seeking to raise up to $1.2 billion. The IPO comes nearly a decade after the murder of Apotex founder Barry Sherman and his wife Honey in December of 2017. No one has been charged with the crime. NVIDIA is entering the market for personal computers. CEO Jensen Huang unveiling today a new N1X processor made alongside Microsoft. The processor will be incorporated into a RTX Spark superchip that will debut in the fall in Windows PCs from Microsoft, Dell, HP, and Lenovo. NVIDIA's plan is to release more than 30 laptop and 10 desktops with new chips over time. Oil prices are rising amidst the uncertainty about a U.S.-Iran deal. The two sides have been trading messages about a draft agreement that seeks to reopen the Strait of Hormuz. The U.S. President Donald Trump says it will all work out in the end, but Iran says a truce in Lebanon, where Israel has pushed deep into that country's territory, is integral to any agreement. Quick look at the markets, and it looks like the winning streak of May will carry into June, at least for today. It's the NASDAQ is up by 0.15, S&P 500 by 0.19. Wow, the FIFA World Cup coming to Canada in less than 2 weeks, and a new book explores the business of soccer, notably the star power of one player, Lionel Messi. Here to discuss the Messi Effect is Paul Tenorio, author and senior writer for The Athletic. Paul, thanks very much for joining us. And when we're talking Messi, it's not messy. It's very beautiful what he has done and what he's done for the game, what he's done for himself. He's a billionaire now. And thanks for joining us.
Thanks so much for having me.
He's quite the character, Messi, isn't he?
He really is. He has, as you said, he's upended what soccer looks like in North America since arriving here from a commercial standpoint. And we've seen all of that with our own eyes. Stadiums across North America selling out whenever Messi is playing in those markets. The #1 selling jersey in the world for Adidas. The valuation of teams like Inter Miami, of course, doubling, revenue tripling. That sort of impact is all in spite of the fact that Messi doesn't love to be in front of the camera. He doesn't love to show his personality. It's sheerly based on how good he is at what he does. The fact that he is a transcendent soccer player, and yet he has this magnetism that influences and changes businesses, and not just in the short term. This book really goes into the boardrooms of Major League Soccer as much as it does the locker rooms in Miami, to show how Messi's arrival and his impact in that commercial spike forced MLS owners and executives to examine the business of the league itself and to think about how to drive the sport and the league forward into the future.
Paul, it's Jeff Hall. I have a question for you. I deal a lot with the National Hockey League, the NHL, so I'm a little out of my water on football, soccer. But let me ask you a question in relation to Messi, his image, his brand. He seems to protect it so well when so many athletes in other sports tend to, and even within soccer itself, tend to have real struggles, either personally or professionally. What is it about him that's kind of made him like Teflon, that he seems to be able to navigate this and protect his brand?
It actually is quite remarkable when you think about how famous he's been for how long. He's lived in the spotlight as one of the most famous athletes in the world since he was a teenager. And yet, you're right, he has been able to maintain this sparkling brand. And I think part of it is just down to his personality. He is very quiet. He is very reserved. He is very family forward. And he doesn't really like to do things that some other athletes do. You don't see him out partying. He's never had those types of issues. And his family has been part of the business. His father has driven a lot of it because Messi is so protective of it. And I think that's really contributed to the fact that he's been able to protect the brand so much, obviously outside of some issues in Spain regarding taxes. But when it comes to kind of lifestyle things, even this decision around Inter Miami, right? He wins the World Cup in 2022 and he decides to come to Major League Soccer. Why? Well, because he wanted his family to have some semblance of balance, because it's not a normal existence to be Lionel Messi. They couldn't really leave their compound in Europe. And now, he's still not able to go to restaurants and things, but he is able to have a little bit more of a balance to his life.
And going back to, you mentioned about MLS had to rethink how they did things. What are some of the big lessons they learned from Messi, and how are they capitalizing on that?
Well, I think the most important thing is, as we know, all of these North American sports leagues are driven by media revenue. And Major League Soccer just doesn't have as much media revenue as the NHL, as the NBA, Major League Baseball, the NFL. And so while they've built a robust local business and they can put butts in seats at stadiums, they need to figure out how to now transition that business to attract more eyeballs on television. And Messi, the response to Messi has been so overwhelming that they've seen that there is, and this sounds simple, but it's a bit more than that, there is obviously this attraction to watching the world's best players in the league. And so they've reframed how they think about the designated player rule, which was created when Beckham came back in 2007. But they've also thought about what the product on the field needs to look like. And it's that simple. Major League Soccer, because we as consumers now have so much more access to the global soccer economy, we can watch the Premier League and the Bundesliga and La Liga and so many other leagues. We have more choice, and Major League Soccer needs to improve the product on the field. And so they flipped their calendar to be more competitive in the FIFA international transfer market. They're changing their competition structure to drive more games of consequence, and they're discussing changing the roster rules. And I mean, when you think about that, by the time Messi, from when he entered the league to when he left, for those three tiers to be completely different for Major League Soccer shows the amount of influence that Messi's arrival had. And the fact that it forced MLS to look at the business and say, we must mature, we must evolve.
All right, I want to talk a little bit about FIFA. The World Cup's coming. Toronto's getting one of the games. It's going to cost, I think, Canada $1 billion. Is it worth it in your eyes, having the World Cup here?
From an economic standpoint, I think that's a difficult argument. FIFA obviously has control of so many of the levers in terms of revenue to take so much of the profit away from these host cities and these host markets. But I think culturally, it is worth it. Coming from somebody who attended the 1994 World Cup as a kid in Washington, D.C., and seeing what the 94 World Cup did to create Major League Soccer and to drive interest in the sport, Canada is at a similar point to where the United States was in 1994 in terms of needing to grow and evolve the game and to add more permanence to the sport in the country. And I think this World Cup can be that for Canada. Obviously, with Toronto and Montreal and Vancouver in Major League Soccer, with issues happening in Montreal and Vancouver about those markets, it's important to show the interest, to expose people to the global game, to kind of bring the best that soccer has to offer into people's backyards. I think the long-term tail, the influence of this tournament on Canadian soccer can be really impactful, but certainly for host markets and host cities, it's been, a bit more costly than they maybe anticipated.
And is there one city you think that's going to benefit the most from this, just before we go?
Well, I hope it's Vancouver. I hope it's Vancouver because I would like to see Major League Soccer stay in Vancouver. It's a wonderful soccer market. They need to obviously figure out the stadium situation, but what a shame it would be if Major League Soccer left Vancouver. The passion that's there, I've really enjoyed. I've been to all 3 Canadian cities to cover Major League Soccer, and I think they really do add something to Major League Soccer. So I hope this is something that helps to continue to spur those conversations forward so that the Whitecaps stay in MLS.
All right, Paul, we got to wrap it up there, but thanks very much for joining us today. Appreciate it.
Thanks so much for having me.
Paul Tenorio, author and senior writer for The Athletic. Still ahead, today's market drivers with Bloomberg's Janine Panzer. And of course, our phone lines are open. Jeff Hull is taking your questions on U.S. and global mid and large cap stocks. Call us at 1-855-326-6266. Email firstcall@bellmedia.ca. Let's take a look at some of the notable analyst calls and recommendations. We'll start with Scotiabank raising its recommendation on the Bank of Montreal to sector outperform from sector perform. PT set to $234 Canadian, implying a 4.5% increase from last price. Bank of Montreal reported earnings and sales that topped estimates for the quarter. Scotiabank cut its recommendation on CIBC to sector perform from sector outperform. PT set to 155 Canadian, implying a 3% increase from last price. CIBC reported earnings and sales that topped estimates as well for the quarter. And Bank of America analyst Lawson Winder raising the firm's price target on Kinross Gold to 46 from 43.50. Keeps a buy rating on the shares after updating the firm's estimates. Meanwhile, Peters & Company Limited initiating coverage of Maxim Power Core with a recommendation of sector outperform. PT set to $6, implying a 39% increase from last price. And let's take a look at some of the early market movers. For that, we're joined by Bloomberg's Janine Panzer. Janine, thanks as always for joining us. And it's what we've been talking about. I think it's probably what everybody's talking about. SpaceX, what's the latest there?
Yes, Roger, good morning. We have key updates for this blockbuster IPO, and what we're looking at is quite interesting. Is Elon Musk has agreed to a lockup period of 366 days. So this is much preventing him from selling shares a year after the offering without underwriter approval. More details that over 60% of shares outstanding before the IPO, including Musk's stake, will be subject to extended lockup period. SpaceX will also reserve up to 5% of the shares in the offering for certain employees, as we call employees and foreign participants, selected by executive officer. So those individuals won't be subject to the restriction. So a reminder that the SpaceX blockbuster IPO could target seeking to raise roughly 1.7 billion, at least 1.8 trillion. Could be the largest IPO ever, and the company filed publicly in May and plan to list the ticker under SPCX.
All right, IBM showing up and some old Trump comments.
Yes, this is a very wild one because there was the shares are open higher this morning, up as much as 15% at last I checked. This is after the old clip of President Donald Trump mentioning stock circulates over social media. And this dozen of accounts, including Polling Market, posted a video of the comments that President Trump made. Again, this is an old clip. It's from last year in December. It was a White House event with prominent tech industry executives. So the video on Polling Market, it posted on Saturday and has over 7,000 views as of at least 8 a.m. this morning.
All right, and it's amazing. From 6 months ago, and it's moving the markets today. Okay, let's get in about Redwire. What's unfolding there?
Yes, Redwire shares are down this morning about 7.4%. Jeffrey downgraded it from hold to buy. Jeffrey is saying that enthusiasm around the space sector has fueled a huge rally, but is limited near-term upside, citing questions about backlog conversion and lacking EBITDA. Jeffrey did raise its price target, though, to 24 from 13, but says that much of the optimism is already priced in.
All right, we'll wrap it up there. Janine, thanks as always for joining us.
Pleasure.
Bloomberg's Janine Panzer. Coming up, Canada has entered a technical recession. We'll have more on that next. Conservative leader Pierre Poilievre is calling for an emergency debate on Parliament Hill this week to address the recession he says the Liberals have caused. CTV's Jeremy Sharon with the latest.
In a Sunday morning letter to the Prime Minister, a push from Pierre Poilievre for Mark Carney to answer for the state of Canada's economy. Calling for an emergency debate in Parliament over the issue, you promised you would deliver the fastest growing economy in the G7. You delivered the only recession in the G7, wrote Poilievre.
This is a full-blown Liberal recession.
A Friday report from Statistics Canada showed the country's economy contracted slightly for a second straight quarter, meeting the technical definition of a recession. Poilievre lays the blame on the government.
This is people's lives. Behind these statistics are empty stomachs, empty fridges, and empty bank accounts.
We asked people in Ottawa what they think and what or who they blamed for it.
I do feel like times are tough.
It feels like a standstill, and a lot of people that you talk to, they feel like they're never getting ahead.
Are we really in this session as a result of factors that were the last 2-3 years, or is this a reflection of the current government?
Some economists poured cold water on the recession talk, arguing the declines are marginal and don't indicate a widespread downturn.
Economists tend to be very careful around using the word recession. The truth is that the economy is not in good shape. Through most of 2025, we struggled up and down.
But most are clear the country's economy is struggling to gain traction, and that can't be ignored.
We need to deal with this. The difficulty is that certain parts of the country are struggling, while other parts of the country really are faring quite well.
In a statement to CTV News, the finance minister's office called Poilievre's letter political theater, chalking up the downturn to external factors like the U.S. trade war and pointing to efforts to build new global relationships and attract major investment here at home.
Prince Edward Island is facing a projected shortage of thousands of skilled workers in key sectors as a new initiative aims to help close potential gaps before they slow economic growth. CTV's Maria Saru with the latest.
These students are growing human cells to help improve skincare products. And over in this lab at Charlottetown's Holland College, researchers are testing how much of one ingredient should go into a drug being developed. It's hands-on training for one of the industries PEI is counting on to grow. But the school's president says talent pipelines are under pressure.
What we're hearing clearly is there's a shortage.
A recent labor market assessment suggests that by 2035, PEI could be short more than 6,000 skilled workers across bioscience, construction, manufacturing, and digital and technical services. To help close those gaps, a $15 million gift from the Weston family is supporting FutureWorks PEI. The new initiative will add seats in high-demand programs, expand trades training, build cybersecurity skills, and support research to help businesses innovate.
There's all kinds of opportunities in applied research, and the college plays a central role.
While PEI has long been known for agriculture, fisheries, and tourism, labs like this one have helped turn bioscience into a major economic engine that generated more than $600 million in revenue in 2024. Much of that revenue comes from selling to global markets, including products and services tied to human and animal health. And the sector has big ambitions, hoping to hit $1 billion by 2030. To do that, PEI BioAlliance's CEO says the supply of workers must meet demand.
Companies that are based here that are looking for a highly specialized skill set will look at their home market first, but if it's not able to be found here, that particular skill set, they'll look elsewhere.
The hope is more learners will lead to more local expertise, so work with an impact well beyond the island can keep happening here. Maria Saru, CTV News, Charlottetown.
And when we come back, Jeff Hall will take your questions on First Call. All right, time for First Call and first email. That honor going to Umesh, who says, as you have been discussing defense stocks this morning, what is Jeff's opinion on Axon Enterprises, which manufactures body cameras and tasers and guns, taser guns used by the military and the police and just about every police force, pretty much, right?
Yeah, pretty much. They're the complete monopoly, not just in North America, but now they're expanding global, which is a great opportunity for the company. But you're right. But like we talked about defense stocks earlier, sometimes they don't get their fair share of the limelight because it's kind of in the shadows. Unless someone's being taser gunned by police and video cameraed, it's only convicts that know about Axon.
You don't look for the label on there. Is that an Axon that they're using?
Exactly. So, but the stock has suffered, though. It's been one of the best long-term 10-year stocks in all of North America, but suffered the last year. It's down about 40% from its high.
Wow.
But part of the reason was twofold. They bought two companies. One was an AI company to help write police reports, and they bought one of the largest 911 networks in the U.S. So again, when a company is spending its piggy bank to buy another company, their stock tends to go down for that. But the other thing that's holding it back a bit is there's a lawsuit with a community in Scottsdale, Arizona, near their headquarters, where they're going to make a massive expansion to do non-lethal training with the taser guns for military, police, and ICE. So a lot of the community is kind of pushing back on that. It's held them up in court. So that's kind of like weighing on the stock a bit. When it should be a great facility, there's no noise. They're not shooting firearms. It's actually non-lethal taser guns. But overall, the company is great. The people are great. The innovation's incredible. I've visited them a number of times in Scottsdale. They have literally walls that look like picture frames. It's all their patents. Hundreds of patents they hold on a number of items.
Wow.
But great company for the future. But right now, be a little bit careful. A nice jump of about 13% in the last week or so. But just know that it never gets its fair shake. It's one of those odd stocks that when the stock should move up, it doesn't. And when stocks should move down, it doesn't. It just tends to have its own way it moves around. But as a business, great business.
And those two acquisitions, are they starting to
yeah, because now when you buy another company, you don't need two CEOs, two presidents, two vice presidents. You start to be able to lay people off. You get the accretive benefit. When you tuck those companies into your own, you start to get the financial benefit as well. And now Axon is getting that benefit.
All right. Another email. Good morning, Roger and Jeff. This one's from Mike. Given the current valuation of Alibaba, would you put new money to work at present? Thank you.
Alibaba's interesting. Hasn't gone up a whole lot the last year. It's basically a clone copy of Amazon for China. It used to be completely run by a guy named Jack Ma that was just a brilliant guy, educated in the West, was a shining star in China, and then he made literally just a few little bad statements about the Chinese government. He was disappeared for a while.
Yes.
Then he came back, but Alibaba, good business overall. I'd just be a little bit hesitant around China. They've got a lot of things they're trying to juggle right now on a number of different fronts, but the biggest thing and the biggest challenge for Alibaba with deliveries and that is oil. And Iran's oil, 90.1% of Iranian oil was sold on the black market out the back door to China for about $17 a barrel. And under Trump, $17 a barrel. And under Trump, China's lost two of the three gas stations. One was Venezuela, two is now Iran. Now they're left with Russia that's now having some problems with Ukraine droning some of the refineries. So China needs that, not just for oil for transportation, but oil is used in chemicals. It's also used in plastics. So right now, I'd just be a little bit cautious on Alibaba because there's a few other things that could be coming its way that are speed bumps in air pockets that you don't want to be participant in. But overall, it's a good business. But right now, there's just a lot of headwinds hitting it from all sides.
Maybe just sit for a bit.
Yeah.
Okay, this one is from Wayne. What are your thoughts on JP Morgan Chase? Valuation seems better than Canadian banks. Thanks.
I'm not a fan of the financial sector necessarily, even though I'm in it. If I had to buy a bank, I'd rather have JP Morgan than the Canadian banks, as an example, in general.
Yeah.
The reason being is it's got wider scope. It's involved from the SpaceX IPO to others. It's just a really well-run bank, and Jamie Dimon's a brilliant guy. So overall, I do agree with the viewer that JP Morgan would provide a better opportunity, a little bit more diversified, a little bit more horsepower behind it than any of the Canadian banks individually would have.
And any concerns with the Canadian banks themselves, or just JP Morgan is the better choice?
Yeah, it's just the better choice. The one challenge the Canadian banks have is there's more and more defaults on things like credit cards, mortgages, things like that. Having Trump punch down on Canada for the next potential 2.5 years isn't going to help. So there's a little undercurrent of challenges with Canada's economy, and that does influence and affect the banks and how they lend the public, but also the companies.
All right, next one. This email is from Craig. It says, is Micron and its peers still a buy based on valuation? If not, how can I justify buying higher price to earnings, slower growing companies just because their price momentum is not rising at such an extreme rate?
Right. So this is interesting. So what he's talking about is a company that's very much involved with the behind-the-scenes storage and other aspects of AI. So one of the things when people look at AI, almost like from A to Z along the line, it's never smooth on the whole assembly line. You start at the kind of the top of the ladder with Google, Amazon, Microsoft, and Oracle, and you go kind of one rung lower on the ladder, then you got NVIDIA that does all the GPUs. You go one rung deeper, you got Taiwan Semiconductors that makes the chips from NVIDIA that go in. So you look up and down the ladder. The one that was kind of be ignored for a bit was energy generation and electricity, but now it is storage. That's the bottleneck right now. It's like, oh my God, they're building all these data centers and they don't have enough places to store. So if you're watching Netflix, it's actually hosted on Amazon's web service, and it's hosted on the properties of Amazon Web Services, but it has to be stored somewhere, like a car in the garage.
Yep.
So the four horsemen really are SanDisk, Western Digital, Seagate, and Micron that he's mentioned as well. They're all great, but they've had a lot of price appreciation, so you got to be very, very careful. You could diversify among a few of those just to be a little bit careful, but know that that bottleneck will ultimately be solved.
All right, Jeff, got to wrap it up there, but thanks as always for joining us. We appreciate it. Jeff Hall, Senior Financial Advisor at Manulife Wealth. And this is up next with the open trading gets underway 30 minutes from now. Have yourself a great day.